Welcome back to Explain the Charts, traders. Today, September 26th, 2025, we're bringing you an in-depth analysis of the AUDUSD currency pair, which has become a focal point, tumbling sharply to a three-week low. The overarching narrative is driven by a resurgent US dollar, gaining significant ground on the back of robust US economic data and steadily rising US Treasury yields. This strength in the greenback puts considerable pressure on risk-sensitive currencies like the Australian dollar, as investors flock towards safer, higher-yielding assets. Meanwhile, despite Australia battling persistent inflation, the Reserve Bank of Australia is widely anticipated to hold its cash rate steady at its upcoming meeting next Tuesday, maintaining a cautious, data-driven approach. This contrasts sharply with the Federal Reserve's projected slowdown in rate cuts for 2025, following substantial reductions throughout 2024, creating a clear divergence in monetary policy. Such a fundamental split in central bank policies between the two nations creates an inherent structural headwind for AUDUSD, favoring the US dollar. Furthermore, China's economic health, a crucial factor for Australia's commodity-linked currency, continues to show mixed signals, with disappointing August retail sales and ongoing deflationary concerns, dampening demand for Australian exports. Adding to the bearish sentiment, FX Street reports that AUDUSD is currently testing vital short-term moving averages, suggesting the recent sell-off still has ample room to extend lower. UB Group analysts also concur, predicting the pair is more likely to trade within a lower range of 0.6565 to 0.6605 in the immediate future. This confluence of factors, ranging from a strengthening U.S. economy to divergent central bank policies and China's cautious outlook, sets a challenging stage for the Aussie dollar's valuation. This negative sentiment is clearly reflected in the recent price action we'll soon explore on the charts. Let's transition to the daily chart to unpack the historical context and identify key technical levels that are currently in play, providing a macro view of AUDUSD's journey. Looking back from May 2024, AUDUSD initially experienced a notable rally, impressively peaking around 0.682 in late August 2024, which showcased a strong period of bullish momentum for the pair. However, this uptrend was short-lived, giving way to a sustained bearish slide through the latter half of 2024, driven by increasing global economic uncertainties. The pair eventually found a temporary floor, consolidating in the 0.61 to 0.62 range around December 2024 and January 2025, marking significant historical lows within our available dataset. A subsequent recovery phase then unfolded throughout the first half of 2025, suggesting some renewed buying interest or a weakening US dollar at that time. But crucially, this upward movement consistently failed to break above the formidable 0.6707 level, which emerged as a strong resistance point. This 0.6707 mark, established as the September ceiling earlier this month and explicitly confirmed as resistance by Forex.com, proved to be a formidable barrier for buyers, leading to a reversal. Observing the price action leading up to September 25, 2025, we can clearly see the re-establishment of a distinct downtrend after the unsuccessful attempt to breach this higher resistance. This pattern of successive lower highs and lower lows from the September 0.6707 peak strongly signals a robust technical shift back to bearish control in the medium term. The volumes observed during these significant price swings, particularly the increased participation during downward moves, further suggest conviction from market participants in these bearish shifts. These historical points and reversals are vital for understanding the current market structure and anticipating future moves, as past price action frequently informs the formation of future support and resistance zones. Focusing now on the immediate and critical daily candles leading up to today, September 26th, a pivotal technical event has just unfolded for AUDUSD. After trading broadly within a relatively tight sideways range around the 0.6600 level for much of early to mid-September, the AUDUSD pair experienced a decisive and impactful breakdown. On September 25th, the daily candle closed sharply lower at 0.65364, piercing not just one, but two pivotal technical indicators. The 55-day simple moving average at 0.6537 and the 100-day simple moving average at 0.6540. This simultaneous breach of both these crucial moving averages is a particularly strong bearish signal, confirming the news of the tumble to a 3-week low and suggesting a potential acceleration of selling pressure in the days ahead. These moving averages typically act as dynamic support levels, and a convincing break below them, especially on increased volume, indicates that bears are now firmly in a dominant position. The closing price of 0.65364 is also notable as it falls below the lower end of the 0.6565 to 0.6605 range explicitly suggested by UB Group, further reinforcing the negative short-term outlook. Market participants will now be closely watching to see if these broken SMA levels, which previously offered support, now transform into new, formidable overhead resistance for any potential bounce attempts. The prominent long red candle on September 25th, indicative of a significant price drop from open to close, also highlights increased selling volume during the session, lending further credibility to the bearish momentum. This significant technical event sets the stage for potential retests of lower support zones mentioned in our news analysis, as the path of least resistance now appears to be firmly downwards, impacting investor confidence. Traders must therefore be vigilant for follow-through selling or any consolidation that confirms these levels as resistance. To truly grasp the intraday intensity and rapid nature of this recent sell-off, let's zoom in on the 15-minute chart, specifically analyzing the price action from the latter half of September 24th into the entirety of September 25th. On September 24th, AUDUSD initially showed some attempts at consolidation, attempting to hold ground around the 0.6590 to 0.6610 range, with several smaller candles reflecting a tentative balance between buyers and sellers. However, as we transitioned into the later UTC hours of September 24th, notably around 12:41 Universal Time Coordinated, the pair encountered stiff resistance at approximately 0.6605 and began to exhibit clearer signs of weakening momentum. The critical breakdown intensified significantly and became very apparent throughout September 25th, commencing with heavy selling pressure early in the UTC morning trading session. We can clearly observe a rapid succession of pronounced red candles, signaling aggressive selling, particularly a sharp and decisive plunge around 12:26 Universal Time Coordinated. During this interval, the price dramatically dropped from 0.6579 to an intraday low of 0.6560 within just a single 15-minute period, indicating a strong surge of bearish sentiment. This rapid decline was conspicuously accompanied by significant spikes in trading volume, unequivocally confirming robust selling pressure and active participation by large market players in the sell-off. Further relentless selling pressure persisted throughout the afternoon and evening of September 25th, pushing the pair progressively lower without any sustained recovery efforts. Key intraday support levels, previously established during brief consolidation phases, were swiftly broken through, indicating a notable absence of strong buying interest to effectively stem the downward tide. The final candles of September 25th reveal the pair settling near the 0.6536 level, which precisely confirms the severity of the daily chart's breakdown and the 3-week low. This granular view vividly illustrates how the broad bearish fundamental sentiment translated into concrete, high-conviction price action on an intraday basis, overwhelming any attempts by buyers to establish meaningful support. Considering the powerful interplay between the fundamental news and our detailed technical analysis on the daily chart, the immediate short-term outlook for AUDUSD appears overwhelmingly bearish. The robust confluence of a strengthening U.S. dollar, consistently reinforced by solidifying U.S. economic data, coupled with the decisive breakdown below key daily SMAs at 0.6537 to 0.6540, paints a very clear picture of imminent downward pressure. Traders should therefore prepare for potential further declines in the coming days, especially if these immediate broken resistance levels continue to hold firm, preventing any significant upside. Beyond the immediate future, the long-term outlook for 2025 also leans significantly bearish, with many analysts predicting record lows for AUDUSD. This somber long-term forecast is primarily driven by the sustained and growing divergence in central bank monetary policies. The Reserve Bank of Australia's continued cautious stance, likely maintaining relatively higher interest rates, contrasted with the Federal Reserve's planned slowdown in rate cuts after significant easing in 2024, creates an enduring environment where the US dollar is fundamentally positioned to remain comparatively stronger. However, it is crucial to acknowledge that this prevailing bearish narrative is not without its potential counterpoints. Any unexpected softening in the Federal Reserve's currently hawkish tone, or a surprisingly robust rebound in China's vital economic indicators, could provide a much-needed lifeline for AUDUSD. A stronger-than-anticipated Australian inflation report, potentially compelling the RBA to adopt an even more hawkish stance, could also serve as a significant catalyst for a swift bullish reversal, catching many off guard. Additionally, the reduced overall open interest in AUD contracts, as notably highlighted in the latest CFTC data, suggests that while bearish sentiment is undeniably present, there might be less deep speculative conviction on either side, potentially leading to sharper, more unpredictable moves on fresh, impactful news releases. Therefore, while the current momentum strongly favors the bears, astute traders must remain exceptionally agile and highly responsive to continuously evolving economic data and any subtle shifts in central bank communications. In closing, let's concisely recap the important price levels to monitor and outline the potential scenarios for AUDUSD, alongside their estimated likelihoods. The immediate critical resistance zone for AUDUSD is now firmly established around 0.6537 to 0.6540, precisely where the broken 55-day and 100-day simple moving averages converge. Any upward bounce that fails to decisively clear and hold above this zone will be a strong signal for continued underlying weakness. If AUDUSD remains consolidated below this resistance, a further continuation of the downtrend towards the August low of 0.6414 is highly probable, carrying a substantial likelihood of around 70% given the prevailing market dynamics and robust US dollar strength. A conclusive breach of 0.6414 would then open the path to test the significant psychological and technical support at the 200-day SMA around 0.6400, followed by the deeper June 2024 trough at 0.6372. This deeper decline carries a still considerable 55% probability if 0.6414 fails to hold. Conversely, for a bullish scenario to materialize, AUDUSD must execute a decisive reclamation and sustained hold above 0.6540 should this upward movement occur. A retest of the UB Group's predicted lower range ceiling of 0.6605 is possible, albeit with a lower 30% likelihood, primarily dependent on upcoming U.S. economic data unexpectedly disappointing market expectations. A more substantial and sustained bullish reversal, targeting the September ceiling at 0.6707 and beyond, would necessitate truly significant fundamental catalysts, such as a definitive dovish pivot from the Federal Reserve or a profound improvement in Chinese economic performance, events that currently appear less likely in the immediate short term. Looking ahead, astute traders must pay exceptionally close attention to the U.S. personal income and outlays report due later today, September 26th, which includes the Fed's preferred inflation gauge, and monitor upcoming U.S. initial jobless claims data for any surprises. Also, the Reserve Bank of Australia's crucial policy decision next Tuesday will be instrumental, alongside any further insights into China's dynamic economy and global trade developments. These pivotal economic events and policy announcements will be paramount in either confirming or challenging the current bearish bias and providing actionable signals for future trading decisions on AUDUSD. Thank you for tuning in to Explain the Charts, and we'll see you in the next one.